how to exit your profits at 100x and above. How can you make sure you've got the full amount of movement out of the upside bull trend and don't sell too soon? Well, that's what we're going to look at in today's video to read the market for that last leg of that movement, aka a wave 5. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus only on currencies, but now exclusive on crypto. So let's dive straight in. Right, we're going to look at some theory over here. Right, so we got this movement that we're getting used to now. If you watch my last videos, if you watch my free Elliott Fibonacci masterclass, which is in the link below, you'll know that I love, absolutely love and adore Elliott waves. And one of the key price actions is the last wave. Normally markets move in a 1, 2, 3, 4, and then a wave 5. And you want to be able to really see ahead of time when there's a high probability wave 3, but also when is the end of a wave 4, so you can really make sure you're ready for that last leg of the movement before a bigger correction. Whether it's Bitcoin as a macro indicator, or you're buying and selling Bitcoin, or these micro coins as in low caps, mid caps, there's a lot of projects out there. So let's just focus on the psychology of buying and selling. So what is the key ratios that we need to know? Now, typical, because we can only do probabilities and never certainties. And the most common typical wave 4 retracement is 38.2% to 50% of wave 3. You go, what does that mean? I'm going to show you an example. We can do the theory, and then I'm going to jump into some live charts. I'm going to show you how beautiful this can pan out around 50 to 70% of the time. We're going to measure this wave 3, and then we're going to see a retracement down to 30 to 50%, and that's most often where wave 4 ends. All right, so we're going to measure this wave 3. That's 100% of wave 3. We measure it. I'm going to show you this in TradingView in a second. And then we'll do something called a retracement. And we'll see a 38 to 50%. And most wave 4s finish in this region. This is a profit-taking wave that people have bought down here and people that have bought down here and riding this wave up. Also, another relationship for wave 4 is if we measure wave 1, beginning of wave 1 to wave 3, 23.6 to 50% retracement is another common one. And what we're looking for is a price cluster. So again, here's this wave 1 to wave 3. And we're going to do a retracement. And what we're looking for are these clusters. This is a high resistance zone and another support zone, should I say, for a wave 4 support. And that's going to be high probability. So what we're going to do now, I'm going to jump into the chart and I'm going to show you how I do this again and again. Because sometimes people think, Jagir, you got a crystal ball, right? How are you projecting these? Because 6, 7, 8, 9 times out of 10 is bang on. All right, so what we're going to do, we're on Solana right now. So obviously you may have seen my video. We did a video over here. We projected this in advance and it moved and it was nice wave 3. We anticipated that this was going to be a wave 4 correction happening. And now we can project ahead of time. So I've taken some data back. So I'm just going to do this so we can kind of get it nice and clean right away here. And what we're going to do is we're going to use this tool called Fibonacci retracement. We're going to click on this. We're going to click this low of the wave 3, the high of the wave 3. And the two ratios that we have. And now I'm going to drag it across. I'm going to drag it across so you can see it nice and clear. I'm going to just make sure it's in line. Bang. So what we just did there, we done the retracement tool, click, click, and then it gives us a retracement. So now this is the most common, 38%, 38.2% to 50% retracement. It's a correction, it's a profit-taking wave, which normally occurs in 3 waves. So now as I unfold the data with Solana, look at this. It literally tags this. Look at this. How beautiful this is. This was textbook. A lot of volume, a lot of mass psychology with Solana. It tags this A, B, C, and we projected this in advance, right? And you'll see this time and time again. And then let me just draw, just so we're on the same page. So wave 4 zone. There's a few other things that we will need to do that we can do with wave extensions. There's other pattern recognition, but this is like the high level. And then Solana just literally took off. Let's have a look. Let's just zoom in like this. And then it continued, right? So once it went over this previous high, that was the confirmation that this looks like a wave 4, bang. But the point being is that we can project this in advance. And then the last thing that I want to do, which we didn't show in the theory, is what is the most typical wave 5, end of wave 5 price target. I'm going to show you this. This is so beautiful. I showed it in a previous lesson, but I'm just going to repeat it. So wave 5 has two really key ratios. Well, there's a few more than two, but there's the two main ones which are quite easy to do. We can do something called an external retracement. Again, I covered this in my free Elliott Wave and Fibonacci masterclass. So I'm just going to show you the lines, the ratios, and the relationship, because repetition is the mother of all skill. So now we've got these two ranges over here, and then we're looking for a cluster. What's the cluster? Well, we're going to measure wave 1. Let me just do it like this. Wave 1 to wave 3, and we're going to project it from wave 4. This is just some extra stuff for end of wave 5, because what you want to do, ideally, is project with high probability where is the likely end of wave 5. So now we know in advance, up here is the typical maximum, up here, but this here is the most common wave 3. So here we want to be getting ready to take profits. As soon as we're above this wave 3, we finish this wave 4, and we're doing this last leg of a wave 5. Another key ratio, which I'm just going to share with you, that's okay, is 100%. So we're going to measure this wave 1, and we're going to project it forward from this wave 4 low. And we can see 100% is the most common, and 1.618 is the typical maximum. And again, it's right in that cluster zone. You see that? That new line that comes up at the top? That's right into this zone. This one hasn't even exceeded the previous, so we can get rid of this. So now we have this multiple degrees of Fibonacci ratios telling us this is an absolute key zone that we should be looking to take profits. Now, when you're looking for your 100Xs, if you see a pattern unfold like this is textbook wave 1, wave 2, wave 3, 1.618 to 2.618 here, boom. We got this nice wave 4. And what you got to get ready for now. It doesn't matter what the project is. Doesn't matter how good the fundamentals are. It's like psychology is psychology, profit taking is profit taking. And when it does this last movement into this range, you definitely want to be risk-free, and most of your position should be exited. Why? Because what we anticipate after a 5-wave sequence is a much bigger correction to the downside, right? And now let's just watch what happened, right? So let's just get rid of this arrow. I'm going to zoom in a bit. I'm showing it like this because this happens time and time again. I'm going to show you a couple of other charts as well because it's important. Let's just get rid of these two arrows because now we're just going to unfold the data. Literally tag that zone. Boom. Went to the upper zone. Hovered around. And now it started this big decline, right? Look at that, in advance. So we don't know. It's really important to say we don't know. Now here, luckily here, it unfolded into a 1, 2, 3, 4, 5 sequence. That's important to note. So we could have projected with higher probability that this was going to be a likely top around here. But now we've started this bigger correction on the downside. Really, really important. So what's the lesson today? Profit taking. You know, if you're buying, especially if you're buying down here. You know, I had Solana back down here, $4, I think it was. $4 already down here, right? It's okay to take some profits here, risk-free, ride the wave 2, massive wave 3, take some profits, ride the wave 4, and your final exit for a top of wave 5, and let the bigger correction then happen, right? Let's also just quickly look at Bitcoin. Bitcoin, again, focusing on wave 4, on a macro picture, right? So we've got this nice, beautiful wave 1, wave 2, wave 3, and then what I did on April 19th, if you saw my video, was we had a retracement area in this zone. So we're likely to see a correction. All I did simply was I measured this wave 3. If we just measure this low to this high, the two ratios that we really want is 38 to 50%, and it's right in this zone. Also, just a top tip, most wave 4s end in the previous range of the wave 4. You go, Jiggy, what does that mean? Here's a wave 4 of the previous wave 4. So I'm always looking, where's the previous wave 4? On the closing data is here. So this makes it a very highly probable zone that the price is highly probable to come down to this zone. And people thought I was crazy when I did this. If you watch my video back in April, but look how Bitcoin unfolded. I've taken the data back, by the way. I've taken the data back. Let's just go back here. All right, so let's say I unfolded. Boom, right into that range. Right into that range. Right into that range. Right? Now, it's unfolding as a different type of wave 4 because for different reasons. But the main thing I wanted to cover today was how to get the top of, so you see I got a lot of lessons lined up for you guys. The one I'm looking for is this one, right? It was this retracement zone that we want to be paying attention to, where we go after a wave 3. Typical zones are 38 to 50% retracements. So you have a nice price zone, and then you're getting ready for the final leg of the bull run. Whether it's a bull run or whether it's a particular cryptocurrency, you want to be paying close attention when you see this unfolding. I see it time and time again, and people get overly bullish, and I'm going, nope, time to take profits, time to take profits. So there you have it. How to take your 100x profits. You need to read the markets, the 1, 2, 3, 4, 5. If it hasn't done the 5th wave, you can be patient. If it's pulling back, there's currencies right now, cryptocurrencies are pulling back right now, but it looks like a clean wave 4. So it's like, that's okay. That's healthy. It's 38 to 50%. Maximum is 61.8% retracement. And then you're 10 more often than not to get this 5th wave. And that's what we're expecting with Ethereum. That's what we're expecting with Bitcoin and a few other cryptocurrencies. If you like today's video, like, subscribe, hit the bell notification. And if you haven't already, take my free Elliott Wave and Fibonacci masterclass. Is in the link below. I show you how to do this step by step, really broken down. Is easy for you to do. Let's finish on a quote. I'm just banging out these lessons for you right now. Whilst we're going through this correction, let's just get the hard thinking going. So rule number 1, never lose money. Rule number 2, never forget. Rule number 1, Warren Buffett. So what I mean by that, losing money is not only taking a loss, but it's also leaving money on the table. So sometimes you'll get a massive upside movement and you're in great profit, but then the market moves back down and you give the profit back to the market. Yeah, we don't want to be doing that. What we want to be doing is reading when is it a wave 4 and when is it a deeper whole big correction. So after every 5 wave sequence, we should anticipate a bigger correction, 50 to 78.6% correction. That's what tends to happen time and time again. So we want to be aware of what part of the market are we in. And Elliott Wave and Fibonacci is one of the best, simplest, once you learn how, everything is difficult before it's easy, simplest things to really see these patterns again and again and again. And then it becomes easier to sell at the top and buying at the bottom. All right, take care. See you soon. Tomorrow, I think we've got a bit more stuff on Fibonacci. And I want to tie a few things together because I'm just trying to kind of get this across to you in a way, because the last 20% of the bull run is coming. It's coming. I'm really, the probability of it, of us seeing a 6-figure Bitcoin over the coming months is high, which means the whole market will tend to really surge. But we want to be ready for it and prepping now, doing the practice and the training now. So when we're in that scenario, we know what to do. All right. See you soon. Like, subscribe, hit the bell notification. See you soon.